Welcome back to Investing Talk Podcast.
Today we're looking at Reddit.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Reddit it's undeniably in a hyper-growth phase.
Right.
But the really interesting part, the part that's catching everyone's attention, is the operational leverage. The Q3 2025 results were a major indicator of this.
Okay, so let's jump right into those numbers. Revenue surged to $585 million. That's what, 68% year-over-year growth?
Exactly. But that top line is, it's only half the story.
That top-line growth is certainly eye-catching, but historically, high-growth digital platforms just burn cash to achieve those kinds of numbers.
They do.
So what about the profitability? Can they actually scale revenue without completely suffocating their margins?
And that's the key surprise here, is why the market is aggressively repricing the stock. Their operational efficiency is genuinely elite. Q3 adjusted EBITDA hit a staggering $236 million. That translates to a margin of over 40%.
Wait, 40% in a growth phase? That's phenomenal.
It is. Most mature social platforms are happy to be in that range, but Reddit is achieving it while still in that hyper-growth trajectory.
I also saw a gross margin number that just jumped off the page, 91.2%. Can you explain what a number that high actually signifies in this context?
It tells us two critical things. First, their main product, the ad inventory, is almost pure profit once the basic cost of serving the user is covered.
And the second?
Second, their business model is extremely capital light. We're seeing that classic ad platform curve where margins just rise so rapidly. The incremental revenue from one new advertiser costs them virtually nothing to achieve.
Right, no heavy manufacturing or supply chain costs dragging them down.
Exactly. And that capital efficiency is key.
Because that freed up cash is what they can then pour into.
Right.
What, the AI data strategy we've been hearing about?
Precisely.
Yeah.
Which brings us to consistency. Because consistency builds trust, and trust, that unlocks higher multiples.
And they have been very consistent. They've beaten EPS expectations for at least 5 consecutive quarters now.
They have. For Q3 2025, they delivered 80 cents in earnings per share against an expected 52 cents. This is what we call an unusually strong setup for multiple expansion.
So these repeated significant beats are signaling to the street that management is either being conservative with guidance or
that the business has structural tailwinds that analysts are underestimating. Either way, it forces them to keep updating their models upwards, which translates directly into a higher stock price.
Absolutely. And looking ahead, management is guiding Q4 revenue pretty aggressively, right?
They're implying $655 to $665 million. That's well ahead of the prior market consensus. It suggests they see sustained growth above 50% year over year right into the end of the year.
Okay, so let's unpack the moat here, because that's what separates a flash-in-the-pan social media company from a durable asset.
Right. What are they doing differently?
Yeah, what are they doing that the major players aren't?
It's all about their unique network effects, which are rooted in authenticity and user intent. Yes, they have 116 million daily active uniques, up 19%, by the way.
Which is strong growth.
It is. But the content itself is the real differentiator. Think about how you use it. You go there for specific long-tail questions.
That's a great point. I find myself going there more often than Google for product reviews lately. It feels more real.
Exactly. It's deep, it's intent-rich, and it's contextual. It sits much closer to search intent than a generic social feed.
And that allows for better advertiser targeting.
Superior targeting. If a user is deep in a subreddit about personal finance, they are a high-intent target for financial services. Much more so than someone just scrolling holiday photos.
Okay, so they have this unique user base. What does that mean for monetization? I'm looking at their average revenue per user, ARPU, which grew 41% to $5.04. Compared to the giants, whose ARPU can be 10 times that, isn't $5 actually a major weakness?
That's the classic bear case, but we see it as the upside. They're clearly deepening monetization. Ad revenue surged 74% year over year.
But they're starting from a lower base.
A much lower base.
Yeah.
The fact that their ARPU is expanding by 41% proves they have massive pricing power that they haven't even fully tapped into yet. The runway is just extensive.
And this is where it gets really interesting. The AI angle.
Yes.
The platform's content is essentially a massive, structured knowledge base. What are the implications there beyond just serving ads?
This is perhaps the most transformative part of the story. Reddit is morphing from just an ad platform into a B2B data utility.
A data utility.
Analysts are speculating about an emerging, incredibly high-margin revenue stream through data licensing, selling access to this rich corpus of conversation to large language model providers and search engines.
So while Google indexes the web, Reddit owns the real-time, human-vetted Q&A data that these AI models need to get smarter.
You've got it. They're essentially licensing the next generation of training data that shifts them from being solely reliant on ad spending to having this structural, recurring B2B revenue stream.
And the market loves that kind of predictable revenue.
Absolutely.
Yeah.
And market chatter suggests they're accelerating their own in-house AI engine for personalized feeds, which just reinforces their value as an answer engine.
Okay, moving to financial health. Given the growth and high valuation, how safe is the company? Can they weather a downturn?
The balance sheet provides a really significant margin of safety. Liquidity is robust. The quick ratio is nearly 12.
12. So break that down for us.
It means they have $12 of highly liquid assets, like cash, for every $1 of short-term debt. It's an enormous financial cushion.
That is a huge buffer. And what about their ability to generate cash?
They're already generating strong free cash flow, around $509 million over the last 12 months.
And because the business is so capital light.
Almost all of that drops straight to the bottom line. Their growth is already self-funded. They are essentially printing cash.
Now we need to address the things that inject some volatility, starting with insider activity. We've seen some pretty significant sales by key executives.
We have, and that always raises eyebrows.
So we saw the chief technology officer planning to sell over 97,000 shares. The COO also sold about $20 million of stock.
Right, and this can definitely put short-term pressure on the share price.
But there's crucial context here, isn't there? I mean, they aren't abandoning ship.
Precisely. These are seen as routine diversification trims after a strong run. They're often pre-scheduled, and both executives still have substantial stakes left. The COO, for example, still holds over 1.18 million shares.
More importantly, institutional money seems to be moving in the opposite direction.
Aggressively. We're seeing large asset managers materially increase their stakes. Nordea Investment Management, for instance, raised its position by over 21,000% in Q2.
That is a massive vote of confidence. It suggests the smart money is moving in while execs are just, taking some chips off the table.
That's a good way to put it.
So let's talk about the technical picture. The stock's been volatile, but what's the underlying trend look like?
The technical backdrop is currently strong. It's signaling a bullish trend with active accumulation. The stock is trading consistently above both its 50-day and 200-day moving averages.
The definition of a healthy uptrend.
It is. And price action shows a strong support base holding firm in that $180 to $190 range. It looks like the big funds are treating that range like a deep discount aisle.
And where are analysts setting their sights?
We're seeing targets ranging from $209 to $235, which suggests some attractive upside potential if the catalysts play out.
Okay, let's look at the calendar. What should investors be watching for in the next few months?
The next 3 months are packed with potential catalysts. In December, you have the major ETF quarterly rebalancing,
which could drive some technical price swings.
Exactly. Then January brings the institutional 13F filings deadline. That's when we'll see who else has been buying.
And the main event.
The Q4 2025 earnings release. That's scheduled for February 13th, followed by Q1 guidance and an investor day.
Given their raised Q4 guidance, a beat and raise here would be absolutely pivotal.
Pivotal. Analysts will be scrutinizing everything, especially ad spend around the holidays, and critically, any update on that AI data licensing revenue.
Before we wrap up, we should touch on some of the risks. There was that legal investigation referencing declining daily active users.
Right, and that caused some volatility earlier. But while the headline risk is real, the reported Q2 and Q3 metrics just directly contradict those fears.
So DAU growth is actually accelerating, not declining.
It's in the high teens, 19% year over year.
Yeah.
So yeah, the company successfully de-risked that fundamental fear with 2 straight quarters of strong growth.
So the main ongoing challenge is just execution. It's execution risk. They have to deliver on their monetization and expansion plans to meet that elevated guidance. That is where the pressure is.
Overall, then, the near-term outlook seems anchored by strong financials, institutional buying, and some critical upcoming earnings events.
And all of that is with the AI monetization story just starting to play out. If we connect this to the bigger picture, Reddit's differentiated approach leveraging this content-rich community data, it really positions it uniquely.
It's not just another ad platform.
No. The combination of structural growth and consistently beating and raising guidance makes this a key name to watch over the next year.
The question you need to ask yourself is this. If Reddit's structured discussion data is truly foundational to the next generation of AI, are we still looking at it merely as an advertising company, or are we buying a new kind of oil field? Remember to subscribe for more in-depth analyses, and we'll catch you next time.